All right, so what is up, guys? In this video on day 7, we are going to go over, as I mentioned the day before, we're going to go over understanding the candlesticks and the market structure. All right, so this is one of the, well, actually, all the classes actually that I show you guys are very important and essential for your trading journey. So in today's video, this is like really where we start to talk about the actual basics of trading. This is where the fun starts. Okay, so and market structure. All right, I don't know if you guys are writing anything, by the way, on a piece of paper, but if not, I would highly recommend doing so. Taking notes, take notes of what things you learn while I'm giving these classes. And, it's really going to help you along the line, even if you want to show it to your friends afterwards and explain some terms, even if you want to reread the notes you wrote. And it also helps with memorization. All right. So, and today you'll learn about how to read the market like a book. We're going to talk about candlesticks. Candlesticks are basically the words of that book, the words of the market, and the structure, which is basically the whole sentence. So all these candlesticks create a structure. So the market is like a book, right? As I said, the candlesticks are the words, the structure is the sentence. So when you understand them together, you stop guessing and you read and you have a general idea of what the market itself is saying. All right. So first of all, let's go about what are candlesticks. Now, I know I already went about that a little bit while I was explaining some of the terminologies the other day, and I was talking about candlesticks and how the charts work, but let me just go into it more in depth today. So a candlestick represents a movement over a specific period of time. So as you guys saw, there are the 1 minute charts, there's the 5 minute chart, there's the 10-minute chart, and actually if I go online and show you guys here the charts, here at the very top, you're going to see that there are some time frames, right? There's the 1 minute, 3 minute, 5 minute, 15, 30, 1 hour, 4 hour daily. All right, these are just the time frames that I choose to use, right? So you can see there are multiple time frames here you can use, and each time frame is displaying the chart a different way. But essentially, if you look closely, you're going to notice that, let me just lock myself because I don't want to misclick or anything, and I made my money for today. So you're going to see here that if I go on the 15 minutes, we have the same chart as the 30-minute, but it's more spread it out on the 15 and the 30. The reason for that is because each candlestick, as I explained before, represents, in this case, a 30-minute time span. So this candlestick started at 11:30, and it is going to end at 12 p.m., right? The previous one started at 11 a.m., and it closed at 11:30, giving space to a new candlestick. So if I go to the hourly, you're going to see it's the exact same thing, but just that each candlestick represents, in this case, each candlestick represents here 1 hour. Sorry, my girl is texting me. And if I go here on the 4 hour, you're going to see that each candlestick represents 4 hour in the day, right? So let me go back here to my drawing. So each candlesticks show 4 key pieces of information. All right, so let me go ahead and draw a candlestick. All right, here's a candlestick, and for instance, let's make it green. So when it's green, it means that the candlestick is going to the upside. Now, I know there's a lot of noise right now. There's construction. I'm downtown right now. It's horrible. Hopefully it doesn't really get heard in the voice, like the video. But anyways, so in each candlestick there are 4 pieces of information. There's the open, which is where the price starts. So this would be open on a green candlestick. Then there's the close, which is where the price ended. So this would be the close. Then there's the high. And then you have a low. All right. So high being the highest point that's ever been reached by the candlestick, and the low being the lowest point that's been reached by the candlestick. Okay. Now hold on. Actually, let me do something here because I want to explain this correctly. Well, I'm not explaining it wrong, but I want to make sure that what I'm saying is understood. So, for instance, let's say that the candlestick, let's say that we're on a time frame of a 30-minute. So let's say we're on the 30-minute time frame on our chart. Okay, what I'm saying by this is, let's say that we are here on the 30-minute time frame. So there's a candlestick that appears every 30 minutes. All right. So let's say that it is currently 11 a.m. It's currently 11 a.m. and a new candlestick just appeared. What you will see when a candlestick just appeared is you will see a line. Okay, it always starts with a line. Okay, so in this case, let me put it in red. Let me zoom in here. This would be the open of this candlestick. Okay, this is at 11 a.m. the candlestick appears, and this is the open. All right, now what will happen next? Let's say the candlestick drives up first. So the candlestick drives up, you're going to see a nice little block right here, and in this case, since it's going up, the candlestick is going to be green, and you're gonna see there's no little wicks, there's no little things at the bottom. I'll explain how these appear in a second, but there's nothing at the bottom and above. All you see right now is this. All right, so what you have right here is still the open, and this at the very top would be the current price, right? So this is 11 a.m. Now if I go here, and let's say it's currently 11:05 a.m. 5 minutes later, you notice that the candlestick went all the way over here. The open remains the same because the candlestick started here. Now the current price is here. This is the current price. And the candlestick is still green because the price went up. Okay? Now, let's say that, again, 5 minutes later, so let's say it's 11:10 a.m. And what you see now, what you see now is this. This is what you see. So the open price remains the same. And this is the current price. We'll just write current. And now you have this wick. So this little thing right here is called a wick. And what this shows at the very top is a high. So this is the highest point this specific candlestick has reached throughout time. This is the highest price that this candlestick has reached. Okay? Now, how do these wicks form? So if I go here, back on the chart, you guys will actually see this. Is, as you can see, if I zoom in here on this 30 minutes, you can see it's currently moving. And what information does that give me? It tells me here, now I already apologize because my chart, just for aesthetic reasons, I like to have it black and white. But essentially it's the same thing. Black candlesticks are going down, okay, and white candlesticks are going up. Same flipping thing. But as you can see here, as you can see here though, the wick is showing me that the lowest point that the price has been to is over here. This has been the lowest price of this current candlestick, and you can see that price is now rallying all the way up, leaving this wick over here. Now all this means is that the lowest price that's been hit by this specific candlestick in the span of these 30 minutes is 23,140, as you can see on the right, and that the current price is now 23,159 over here. Well, now it's driving down, right? It's constantly changing. The current price will constantly change within the 30-minute time span, and you can see that it's like it's a living being, right? The candlestick is moving. It's moving as we speak. And now you can see at the very top, there's a really small wick. There's a really small wick over here. That is because the highest point that this candlestick went to is 23,170. Now, how does that happen? The same way it happens over here. So let's say that it is now 11:23 a.m. Okay, so we're still within the same candlestick. We're still talking about the same candlestick. Now, let me just put it a little higher. And let's just say that now the candlestick looks like this. Now, it is red, which means that we're now in the negative. We're now going down. The open is still over here. And now the current price is over here. This is still the highest point the candlestick has hit. And this wick right here would, oops, I said high, but this wick right here would be the low. Because this is the lowest point this candlestick has hit. Okay? Now, what can we tell from this candlestick? The first thing we can tell is that at the open, okay, actually, let me just zoom out so we can better see what happened throughout the history of this candlestick. So 11 a.m., we had an open, okay? And then the candlestick drove all the way up, and it drove somewhat down at between 11:05 and 11:10. And the fact that it went down, it created this wick, right? This wick is showing us that the highest point this candlestick has been to is this high over here, right? Now, what we can tell because of this right here, because of this candlestick, is that the price drove all the way down. It is now negative. And why is it red? It's simply because the price is lower than the open. It's lower than the price at which it opened, okay? Now, how could I explain this? Let's say the price opens at this line. The simplest explanation I could give you is that anything that's above the open is green because it's going up, and anything that's below this open is red because it is going down. Now, this is the only reason why this candlestick is red, is because it is below the open price. Okay? Now, just for a little more information on that, just because now I gave kind of the structure, let me just show you guys more specifically what a candlestick is structured with, okay? So a structure for the candlestick would be the center being the body, these being the wick. So there's one wick right here, and there's another wick right here. Simple as that. That's all it is, okay? Now, let me do something extra. If, let's say, we have a green candlestick. On a green candlestick, on a candlestick that is going up, that is, the open would be at the bottom of the body. Okay, so this is the open. The lowest point would be, well, obviously, this low. This is the current price. And if the candlestick is over, this would be the close price. This would be the price at which the candlestick closed. And the high would remain the high. Now, why do I say it's the close price? Aha, this is where it gets interesting. So let me draw this again, okay? So we just mentioned that this is the close price. Now, the reason for which this is the closing price, let's make it green so I can say it's a green candlestick. The reason why I say it's a close price is because let's say it's 11:30 now. Oh, why is it writing so bad whenever I'm zoomed out? So let's say it's 11:30 a.m. And this candlestick has been moving for 30 minutes. It is now 12. Oh, let me just go back. It is now 12 a.m. 12 p.m. What am I saying? 12 p.m. What does that mean? It means that for 30 minutes, this candlestick moved, and then at 12 p.m., we have a new candlestick, a new 30-minute candlestick that will be moving for the next 30 minutes. But where would the next candlestick start? It would start at the last price of the previous one, which for this instance would be the closing price of the previous one. So what you'll see is a candlestick appear at the close of the previous candlestick. And then it'll do whatever it has to do. It can go up if it wants to. The price could go down if it wants to. It might leave a wick and whatnot. But the next candlestick always starts at the close of the previous one. I'll show you an example, a live example in just a second. Okay? So, let me just delete all that and draw you guys what it looks like when you have a candlestick that is red, meaning the candlestick is going down. How do we know which is which? So the structure is still the same, except that here, this would be the open. When a candlestick goes down, the open is at the top of the body, and the close, or the current price, would be at the bottom. Okay? So let me just show you guys a live example. Just because it is, let me go on the 5-minute time frame. So as you can see, 5-minute time frame, what does it mean? It shows that each 5 minutes, there's a new candlestick. So now it is almost 11:50. So at 11:50, we should have a new candlestick right here. And that candlestick will appear at the top of the body of this current candlestick that is moving at the moment. So I'm going to let you guys see that in live, right? So as you can see, the close, so if you look at this black candlestick, the one that's going down here, when this candlestick closed, the previous one started at the bottom. It started at the close of the previous candlestick, and then it went all the way up, close right here, and the next one open at the close. Now it's a little choppy, which is why you see there's a small little gap over here in between the prices. But overall, all in all, you can see that where this closed is the open of the next candlestick, right? So let's watch this. It should change in the next 3 seconds, right? So you can see the price stops right over here. In any second now, it should change because it's 11:50. Second. Just waiting for that to move because it's already 30 seconds in. Oh, there is a delay sometimes on the prop firm's clock. Okay, so we can see prices pushing up, and as we're pushing up, we're having a wick that's being formed at the very top. Just waiting for the next 5 minutes to appear because it's now 11:50, so we should have a candlestick like right here. 11:51. Oh no, it's still 11:48. Okay, it's just my iPad that's a little in advance here. So let's just wait 1 more minute. I'll accelerate the process, but you will see that a new candlestick will appear at 11:50, exactly at the close of this candlestick. Okay, so I'll just wait a few minutes. I'll just wait another minute for you guys to see, and then we're gonna jump right back to the explanations again. All right. All right, so you can see that the candlestick closed and the new one started at the close of the previous candlestick, right? So you can see it's very nice and clear, and now price is driving down, creating a bottom wick, and what we should see now is price moving all the way up. So we're going to see a nice little stick here at the bottom. All right, so let's jump back to our explanation and get it over with the candlesticks. Last thing I want to talk about when it comes to candlesticks is whenever you have a candlestick that's green, meaning it's going up, we don't say, oh yeah, the candlestick is going up. We mention this. The name we give these candlestick is a bullish. Okay? Whenever you hear someone say bullish, or the market is bullish, or the candlestick's bullish, it means the price is going up. Okay? It essentially means that the price is higher than it opened. This is what it means when it is bullish. Now, if you see the candlestick being red, I'm not going to draw it because I'm kind of lazy. But if you see the candlestick being red, we call it bearish. Bearish, meaning the candlestick is going down, meaning that the price is lower than it opened. All right? All in all, that's all you should know for now when it comes to candlesticks. Okay? So what do candlesticks tell us? I know the video is getting long, but it's going to be a long video today. Okay? There's a lot of notions, and I don't want to make multiple videos about it just because, you know, it's better to give all this information within one video so you guys are not confused when you guys go ahead and practice. So, what do candlesticks tell us? Each candle shows the battle between buyers and sellers. Okay? So, when you see a long wick at the top, let me redraw this. Hopefully, you guys took some notes and drew it yourselves. But what does it mean? Let me do this. And let's make it so it's green. So that means the open price would be over here. This is where it opened. Okay? So what does it mean when there's a long wick? So when there's a long wick at the top, like over here, all in all, what it means is that there's a lot of rejection. So a lot of people decided to sell at the very top of this wick. So price drove all the way up, and then people started selling, which is why the price started going back down at its current price over here. Okay? So all it means is that at this price, let's say it's $2, people started selling, which hence made the candlestick go down. Now, if you would have the opposite, if you would have had, let's say this, and a long wick over here, and let's say this is a green candlestick again, so the open would be over here. All in all, what it means is that when the price reached this price point, which let's say is I don't know, $1, people started buying like crazy, which is why the price went all the way up. Okay, so long wick at the top means rejection from above, so there's a lot of selling, there's a lot of selling pressure. And a long wick at the bottom means that there's a lot of buying pressure, that people are rejecting this price. People are buying at $1. Now, once you see that there is a huge green candlestick, what we'll say is that there is a strong buyer momentum. Okay, I know I'm going to say that a lot, so might as well include that in my teaching, but I say strong buyer momentum. That means that buyers are stronger than sellers, and these create huge candlesticks going up. Oh, my cat decided to help me with the course. So, and whenever you see The opposite, candlestick going down, in which case it would be green. There's strong seller momentum. Okay, now let me give you an example of that. Let me give you an example here. Here, if I go on the chart, you can see here this candlestick. Let me draw the brush. This candlestick right here, it is buyer momentum. Look at how big this candlestick is compared to the others next to it. That means that buyers are going crazy, hence why the price went up. And that's not even the biggest one you'll see, right? Let me show you guys a big buy. Look at this. Look at this. See these very small candlesticks over here. Let me see if I can pull an arrow. Very, very small candlesticks. And then you have, boom, huge buy candle. Huge buy candle. And then you have a bigger one. Look at this. This is going crazy, bro. This is going up like crazy. This is money right there. Money to be made right there. And it goes the same way when it's the opposite. You can see here there's huge seller momentum. And we can see it's driving all the way back down. And so whenever you see these candlesticks, it's a good sign that, it's an opportunity for buys, because buyers are going in like crazy. And oftentimes it happens when there's news, or when, there's, news releases, when we're talking about the tariffs, when we're talking about the employment rates, inflation rates. This is when you see these big, huge candlesticks. Now, if you see that there's a small body, like a very small candlestick, it might have huge wicks. But if you see like small bodies, let's say in this instance it's red because I've used a lot of green. What this means is that there's indecision. Okay, there's indecision. All in all, what this means is that the volume is very low. Like there's sellers, there's buyers, but no one knows where the market's gonna go. Okay, they don't know if they want to go up, and they don't know if they want to go down. So you're gonna see these little small candlestick. Let me show you an example right here. Look, if you look here, I had a perfect example right here too. Okay, there you go. Let's say here. Okay, here was kind of a boring day. Look at this. Shoot. There you go. So if you look here, look at all of this. Look at how small all the candlesticks are compared to the rest of the week. Like, this just shows that the market doesn't really know where it wants to go. And you can see that for a while, like between 130, let's say 125, all the way to 3. So for like 2 hours, the price didn't go in any specific direction. It just kind of stayed there. Okay. And this is just a sign that there's indecision. People don't know whether they want to buy or sell. Okay. Now, when I was talking about time frames, because let's go over now the time frames, because we have talked about candlesticks for quite a while now. If we talk about time frames, I know it's a lot of information. Feel free to take a break if you feel like it, if it's too much information. But now let's talk about the time frames. So, as I mentioned before, when you look at candlesticks, you can see that candlesticks, you can have 5-minute candlesticks, you can have 1-hour candlesticks, you can have 4-hour candlesticks. Now, the same market, as you saw, let me go back because I feel like it's better when I give live examples. As you saw, you can look at the market from different time frames. The same market can look very different depending on the time frame. Okay, as you can see, this is the hourly, so each candlestick represents an hour in the day. This is the 30 minutes, this is the 15, this is the 5. Essentially, they all display the same information, the same direction, the same general direction is displayed the same in each time frame. But the information provided, the smaller the time frame, the more precise we get. Think about it as a microscope. If you use the 1-time zoom, you're going to see this. If you use the 5-time zoom, you're going to see this. If you use the 1,000-time zoom, you're going to see this. More details within the market. So on the 1-minute chart, basically, you're going to see 10 candles. If you see 10 candles on the 1-minute chart, it essentially represents 1 candle on a 10-minute chart. Or if you look on the 15-minute chart and you look at, let's say, 15-minute chart right here, those same 10 candles become 1 candle. When you let's say you have 2 15-minute candlesticks. So let's say we have let's say we have these two right here. All these 2 candlesticks can be represented by 1 candlestick on a 30-minute You know what I'm saying? This 30-minute can be represented by two of them can be represented by one hourly candlestick, and so on and so forth. 3-minute, 5-minute candlesticks can all be represented by 1 4-hour candlestick. So essentially, it's like I said, it's like a microscope. You're just going more precisely within the market price movement. Now, that's why you'll learn multi-frame analysis, and I'll explain that later in another video because it would be too much information. But this is really, really, really important while you trade. You have to look at different time frames because it allows you to see where price is moving right now. It is good to know where price should move for the day, but you also want to know where price is going to move right now in the next 5 minutes or in the next 1 minute in order for you to have precise sniper entries. All right? So, what is now market structure? Whew, this is where it gets a little more sophisticated. I know this is a long video. Bear with me. I'm probably gonna get a few homeworks to do after this one. But now let's talk about the market structure. I'm tired too, guys. I don't want to be doing this, but I'm still doing it. So bear with me. I'm doing this for you guys. All right. So what is market structure? So market structure is how price flows. When we talk about market structure, we talk about highs and lows. Just like we talked about the candlesticks, highs and lows, market structure is based off of highs and lows. Now, we create what's called higher highs and higher lows in an uptrend and lower highs and lower lows in a downtrend. Let me show you guys live examples. So let's say the market is going like this. This would be called a uptrend. All right? Let me show you exactly why. Okay, let me just... Oh, sorry. All right, so this would be called... Oh, whoops. This would be called an uptrend. Why is this called an uptrend? Well, it's fairly easy to see that the market is going up. Direction is up, right? But how do we define an uptrend? Basically, you're going to see that there are tops and bottoms that are being created. In this case, each top is going to be called a high, and each bottom is going to be called a low, right? High, low. Now, what it means when people say higher high, higher low is, let's say this is a high and this is a low. Essentially, we call this a higher high because this high right here is higher than the previous high. And this would be called a higher low because this low is higher than the previous low. That's the only reason why we call it higher high and higher low. And essentially, whenever you have a higher high or higher lows, you are in an uptrend. Simple as that. There's nothing else to say about it. When there's higher highs or higher lows, you're in an uptrend. All right? Now, if we're in a downtrend, essentially it's just going to be the opposite. Okay, this is a downtrend. You see the price is going down. Okay? Down trend. And the reason for that is because we have, let's see, here a high and here a low. We will have here a lower low, and here we will have a lower high, just because this high is lower than the previous one and this low is lower than the previous one. Simple as that. That's a downtrend. And now the other thing that you might have is called a consolidation. It's when price is stuck. It's not creating any higher highs. It's not creating any lower lows. It's just like it's stuck between two levels, which I'll call, and which people call key levels. Okay, so this is a high, this is a high, this is a high, low, 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 low. And essentially price is stuck between what's called a key level. I'll call it key level 1, let's say, and key level 2. This is the structure. Okay, these are the only 3 things you will see when you trade: downtrend, uptrend, and consolidation. Okay? Now, think of the market structure, by the way, as like a skeleton. It's like the skeleton of the price. It helps you know, are we trending? Are we reversing? Are we going sideways? Are we going up? Are we going down? This is a must. You absolutely need to understand these points, these terms while you trade. Okay? Let me just put on do not disturb because all right. So, how do we read market's intent? How do we know, how do we anticipate the direction of the market? This is where we have these terms called break of structure, change in character, liquidity sweeps. Okay? But before that, let me make a link between the candlesticks and the trends. How do we know when there's a high? How do we know when there's a low? Simple, guys. Very flippin' simple. Whenever you see a candlestick going up, or let's say this one is going down, and another candlestick, let me add some spice to it, and another candlestick going like this, and this is like a bottom. Okay, let me draw colors so you guys cannot be lost. And let's say this is going up. Essentially, what this candlestick is telling us, what this drawing is telling us, is that price went down before going up. So this bottom right here would be the low. This is a low. Whenever there's a change of direction, whenever there's two candlesticks, different colors, this is a low. Because price went down and now it's going up. Okay? And it's the same thing for the opposite. You only need two candlesticks. You only need two candlesticks in order to create a high or a low. Okay? So let's say this one is going up. And you have this nice little top right here. And essentially what it tells you is that price went up first and then it went down. This right here is your high. This is a high. Simple as that. This is how you get your highs and lows. Let me show you. Simple. Let me go here. As you can see, let me use the line. Let me use this. Here, price went all the way up and went all the way down, essentially creating a high over here. Right? Simple. Simple. So if I was to ask you guys, in what direction are we going right now, I would say this is an uptrend because price is moving up. It's creating higher highs and higher lows. So we have a high, we have a low, we have a high, we have a low, we have a high. And you can see it's getting tighter and tighter, but we're still respecting the trend in itself. Then we have a low, and then we can see we have a lower low, but then we have a higher low. This is where it gets a little more sophisticated because now it looks like we're reversing to the downside. But as you can see, all throughout here, we were going all the way up, essentially creating an uptrend. And now it seems like we're changing direction and going down. And this is what I want to talk about. How do we know when there's a change of direction? This is going to be the last thing of this video, just because I've given so much information at once. I don't want to confuse you guys. So how do we know when there's a change of direction? How do we know the market's intent? Okay, so we have what's called within the market the break of structure. Break of structure. So break of structure basically means we have a trend continuation. So how do we note a break of structure? So let's say we're in an uptrend. A break of structure happens when a high is broken in order to create a higher high. So the break of structure in this case would be right here. And oftentimes you guys will see YouTubers or whatever write just BOS for break of structure. And a break of structure happens when a high is broken in order to create a new high, a higher high. In this case, it would be broken again as well to create a higher high. So this would be another break of structure. Simple as that. It just means that we have continuation in the trend, that we are still going up. Which is why sometimes you're going to see traders that trade off of breakup structures. That once the high is broken, they enter for buys because they know that breakup structure means continuation to the upside. Now, if I was to say the opposite for a downtrend, whenever you have a low that's being broken to create another low, because this low broke, so we have a low right here, and then we created another low that's lower than the previous one, we would have here the break of structure. And then we create another low, which ends up being broken to create, let's say, another low. This would be our break of structure. Simple as that. This is the break of structure. It just means continuation in the trend. Okay? Now, when we talk about change of character, oftentimes, let me write this down first. Change of character oftentimes will be written as COCH by YouTubers. Sometimes people will call that a market structure shift, which essentially means the same thing. By the way, guys, don't be so surprised and don't be like astonished when you see YouTubers or people giving all kind of names like fair value gaps, order blocks, and like all these kind of things. They'll give different names like in bound zone. Like they're just trying to sound sophisticated, but essentially they're just saying the same thing as we are. It's just that, you know, they're trying to sell their craft, so they're going to use complicated words to say the same thing. Okay, but it's the same flipping thing. Okay, now what is a change of character? Change of character. Let's say we're having an uptrend, and then we end up going down. So you would have, like I said here, your break of structure, because why? We created highs, and each high is being broken by another high. Now, where is the change of character? Change of character happens when a low. So, okay, a change of character happens when a low is being broken by a lower low when we were previously in an uptrend. Okay, so as we know, as we said before, when we're in an uptrend, we have a low and then we have a higher low. Now, as we can see here, the next low isn't higher than the previous one. This low is lower than this one. So we would call this a lower low. This low is lower than the previous one, right? And when this happens, this creates what's called a change of character, meaning we are changing direction. Simple as that. Whenever in an uptrend a low is broken, whenever we go from higher lows to a lower low, the first lower low that appears, because here would be another lower low, but the first lower low would be, she's showing me apartments. The first lower low would be change of character, change of direction, and you can see the price is now moving downwards. Same thing goes if we were going down and then we decide to go up. Okay, so we can see here we had a high, then we had a lower high, here we had a lower high. Essentially, we were going down, and then we have here a higher high. So this high is higher than the previous one, meaning that here you would have a change of character. Change of direction. Boom. This low is no longer, this was the last lower low, and now we have a higher low, meaning that the price is continuing upwards, and then here we have another high, which is going to be called a higher high. So just to summarize, whenever in an uptrend a low is being broken, in an uptrend, when a low is being broken, we have a reversal. We have a change of character. Whenever in a downtrend, a high is being broken, whenever we have a higher high, we have a change of character. Simple as that, guys. Literally simple as that. Okay? Now, this is all I want to show you guys for today. I was going to talk about liquidity sweeps, but I feel like it's a little too much of information. I've already, I think it's been like 23 minutes already, and I don't want to give you guys too much information to learn and whatnot. But I did not forget that one thing. This is really, really important, guys. Never, ever forget. Listen, God has changed my life, so I'm going to show you guys what the Bible says about it all. Ecclesiastes, by the way, written by the King Solomon, one of the smartest. You can look it up. He actually existed. The smartest king on earth, the richest and smartest king on earth that's ever existed in the history of the world. Here's what he wrote, because Ecclesiastes was written by him when he was, at an old age. So this book is filled with knowledge. You guys could not be like, even if you guys are not Christian, I would recommend reading that book because it is filled with knowledge that has it changed the game for me when it came to trading. And today I'm going to talk about Ecclesiastes 3 verse 1. So what does it say? It says, there is a time for everything and a season for every activity under heavens. All right. So why do I bring this? I know we just talked about market structure and like change of direction. And let me reread it again. It says, there is a time for everything and a season for every activity under heavens. So the parallel I'm trying to make is market structure shows us that the price of the market, just as life, by the way, moves in seasons. When you force a trade against the season, in this case against the trend, you're fighting against the flow and you're not going to make it. You are not going to make it. If you're in a downtrend or in an uptrend and you expect the price to go down, but you still decide to enter. So let's say the price is going up and you know that you feel like the price is going to go down, but you decide to enter for sales while the price is still going up. You're not following the flow. You're not following the moves in this season. You're not following the market structure, and you will fail. Okay, so I know this is not exactly what this verse is not exactly linked to that, but how you could apply it to your life specifically is to know that there's a season for everything. Right now, you're in a season of learning. Also, this is the parallel I want to make. You're in a season of learning. I know that you guys, while I show my examples, you guys see how much I make, and you expect to have the same results. And I promise you it's not going to be like that. I've been doing this for years, okay? I've had countless months, countless accounts that I've blown, countless losses, and this is just the result of effort, of waiting for the right season, okay? So, all in all, I'm really proud of you guys for making it through day 7. This is a great day, and the assignment I'm giving you for this video, I want you to go ahead and open a chart on TradingView. I've shown you guys how to use TradingView now. I want you to open a chart, and I want you to label. I want you to draw on that chart. Put some lines, put some writings or whatever, and I want you to go to the 5 or 15-minute time frame and label higher highs, higher lows, and mark out where you see some breakup structures. Kind of have fun with it. See if you can find where there are highs and lows. Now, I know the charts that we're using are not lines, but I've just explained to you guys how we find highs or lows. I showed it right here. It only takes 2 candlesticks to create a high or a low. So what I want you guys to do is try to label highs and lows on your chart. It could be the ES chart, NASDAQ chart, gold chart, whatever you want. Label that. Write down on the chart, this is a higher high, this is a higher low, this is a break of structure, this is a change of character, and screenshot that and mark the trend. Okay, mark it out with a pencil or mark it out whatever, and put it in the notebook. Okay, and ask yourself, what is the market trying to do here? Is the market going up or is the market going down, in your opinion? And then with that screenshot, in time, you will see if you're right or wrong. That's the only reason why I'm asking you to do a screenshot. Take a screenshot. All right. So all in all, in the next course, we are going to talk about, on day 8, we are going to talk about how to read a clean chart without indicators, because a lot of people will be using indicators. I don't personally use indicators. I only look at price action, and I want you guys to be as skillful and master that skill of reading price action, reading price movement. Okay. I want you guys to get better at this. So, for example, here, I don't have any indicator, but I know that price is going to go up just because of how the price is currently moving. I'm expecting price to reach this high right here. You know, that kind of thing, okay? I want you guys to get used to this, and we're going to talk about all of this in day 8, and this is where all the fun's going to start, really, guys. This is where you guys will actually be able to take some conscious trades and kind of get money for yourselves as well. You know what I'm saying? So, I'll see you guys on day 8, and you guys take care, and bye-bye.